Welcome to Everything Co-op, bringing you information on how cooperatives can help improve your quality of life. This show is being sponsored by the National Co-op Bank, NCB. The NCB is dedicated to strengthening communities nationwide for the delivery of banking and financial services for the nation's cooperatives, their members, and other socially responsible organizations. For more information on the power of community ownership, visit ncb.coop. That's ncb.coop. Now stay tuned for your host, Vernon Oakes.
Wonderful Thursday morning. Sun's up. We're up. Everything is great. And Mr. Richard Ensweiler is our guest this morning. Good morning, Richard.
Good morning, sir. How are you?
Great. And congratulations on being inducted or will be inducted into the Cooperative Hall of Fame. You're one of the most recent heroes. So congratulations, sir.
Thank you. What an honor. I was surprised and delighted.
Surprised and delighted. That's great. It looks like I'm delighted about the work you've done in your world and your life. 50 years in the cooperative movement and the credit unions.
Yes, it's been a real joy. It's one of those you kind of stumble into when you're young and not understanding the opportunity, and it was a blessing from day one. When you get that belief that you can help people in a way that is functioning to just serve them as opposed to stockholders or shareholders, it's pretty easy to come to work every day.
Okay, you're hitting real early on. My last question normally is, did you like what you did, your career? And you're already hitting on that.
Yes, sir.
How did you stumble into this?
Well, I was going to college, having to pay my way through, and after my first year, I needed a job. I was taking up finance as a major, and there was a ad in the paper in Milwaukee, my hometown, that said they needed a teller in a credit union. Well, I knew what a teller in a financial institution was. It sounded like it would be something that would be right up my career path alley. So I applied and got the job, and found out that it was not only a good place to work with good people working there, but that it was different than I had anticipated in the little I had learned through the textbooks about why institutions serve the public, if you will. So that cooperative atmosphere prevailed, and I liked it. The boss liked me, and he said, when you finish college and fulfill your military commitment, come on back. I think you're the kind we want in this credit union space.
So you're going to college and you had a military commitment and come on back. Okay.
Yes, sir.
That sounds great. It's nice to find out about co-ops early on. I didn't find out about it until I was 50-something or so. So you're in your almost 18, 19 or whatever, and you
Correct.
found about credit unions.
I was 19, yes, sir.
Great. And so your whole career has been in this credit union space?
Yes, sir. In a number of capacities. First of all, as a credit union employee. And then when I went back to that organization, State Central Credit Union, upon graduation and military, they said, look here, there's 4 guys over there, and they're all ahead of you, and you won't be able to pass them up. So you've got 2 years here to learn everything you can learn. We'll teach you as much as we can, but then you have to go off on your own from that point on. You got to find your way in this world. So after 18 months, where they taught me all the functions of a credit union, I was so pleased. The Harley Davidson Credit Union was looking for a treasurer manager.
Wait, excuse me a minute. So you got a master's in credit union?
Yeah, there you go. Exactly. Yes. So I applied for this position as a head of this small Harley Davidson Credit Union. Got the job and really, really enjoyed that. So now I had the role as CEO of a credit union.
Okay, so 2 years, a year and a half it took you. They said 2 years to learn everything about a credit union, how it functions, how it works, and I want to get to some of that. Now, then you went to Harley Davidson Credit Union.
Harley Davidson, yes, sir, the motorcycle company.
Did you get a motorcycle too? Is that part of the deal?
I rode a motorcycle in college, but I hate to admit it was a triumph.
Okay, now that was one of my first ones too, so okay.
But after I'd been there for a while, yes, I did in fact purchase a Harley Davidson.
All right. So you 18, 19, 20, 24, 25 years old?
I was 23 years old when I took over 24 years old when I took over the Harley Davidson Credit Union. Yes, sir.
As the guy in charge?
Yes. It was a very small shop. It was only 2 employees, and it was a very interesting experience. The credit union was located in the old guard shack between the outside door and the inside door, the vestibule, where people used to report in and show their badges as they came to work. So it was tiny, it was loud, it was right under final testing of motorcycles, and it needed a lot of work. But we put it in. We moved the office to a central location between the 2 Harley Davidson plants in town. The membership increased. Everything turned out really, really well and positioned me for bigger and better things.
You stumbled into it needing to work to go to college. You stumbled in and became a teller in a credit union. Yes, sir. So you must have had some good work ethics, as the guy wanted you to come back after you finished college and your military career.
That's always, I don't know, I guess my parents instilled that in me, but wherever I was, I really gave it everything. I enjoyed the work. Yeah, even the summer jobs that weren't related to that in school, I always put up everything into it because it was the right thing to do, but it was also a good learning experience in whatever it might have been. So, yeah, I was very dedicated to it, and I was single, and I gave that Harley Davidson everything I had, that credit and everything I had.
All right. So what I'm also interested in is they said to you when you came back, all right, you came back after the military, and somebody set you down and said, look, those guys are you can't pass them. They're in the line. So we're going to teach you all of this. So they're going to teach you for 2 years. That's phenomenal. I mean, I've never had that to happen in my career. They sit you down and say, you're going to learn this. We're going to teach you all the aspects of this world, this credit union, how it works, how it runs. So what are some of the things they taught you in that 18 months of getting a master's in credit?
Well, I have to credit the CEO. His name was Paul Hayes. And he just saw something in me that I'm not sure I saw. Certainly my friends and family probably never saw. But he saw somebody that could give the credit union movement that he believed in so much an opportunity to make it bigger and better. So what they taught me is I had already experienced a teller line. So the next thing they did is have me do collections, learn how to collect delinquent loans. Then I did that for a few months, and then they put me into lending, and so I made loans for quite a while. So I got to make the loans, and then realized, what the pitfalls were in making a loan that might cause a loan to be delinquent. So I was a better lender because of it, I think. They put me into the accounting department, and I worked the accounting department to the point where when the chief accountant took a couple of weeks for summer vacation, I was qualified enough to serve in that capacity and have that responsibility. And then I served a short time in the real estate department, working with the guy there that ran mortgage lending and learned that. So I gained all of those very practical skills to run a small credit union myself.
What about the skills of managing people?
That I hadn't picked up yet, and so that was new to me. But having been an employee and had worked a lot, I always had 2 summer jobs every year. I had a feel for what worked to motivate me, and I was able to, put that into my demeanor. And one of the things that I take great pride in is the relationship I always had with the staff that I managed. It started there with just 2 employees, and then when I got to managing bigger organizations, it was important to me to understand the employees and what made them to pass on this passion for cooperative finance and lead them in a way that this seemed to work.
Okay. This gentleman, Richard Hayes, saw something in you. So as you got to learn the cooperative way, if you will, the cooperative values and principles, did you see that finding people and training people was a part of what co-ops do?
Yes, I believe so. On one hand, it takes somebody special to want to serve for the purpose of just making life better for people. But on the other hand, I think it's something that once you're into it, you really get caught in it. As much as I appreciate what banks do, I don't appreciate the fact that still the main motivator is to increase the value of the organization for stockholders. It's real easy to go to work every day, and it's easy to teach the employees that our only motivation is to make sure with every action or transaction, the only result necessary is to make life better for the person you're dealing with. So when that's the only motivation, certainly you have to do it profitably. You can't lose money. But when you know that your total focus is on making life better for that for the person you're dealing with, who's a member owner of the institution, it's something that's easy to get caught up in, and I appreciated it, and I think I shared that enthusiasm and passion with those that I employed.
Making life better for the member owner. Okay. And
Yep.
You need people then working within the credit union that have that view. So he saw something in you early on where you could perhaps make life better for people.
Yeah, I'm amazed. I'm impressed. I thanked him many times for recognizing something that I had no idea about at that point, and he saw it and was able to communicate it to me and share that passion.
So what year was that? You're 18 years old. Your first year of college.
Yeah, I started work there in February of 1963.
1963.
Yeah, I'm getting to be an old buck.
So 1963, the engineer in here said he was 4. I was in the 10th grade. So you got a couple years on me. I graduated in 1965. So in February, I might have been in the 11th grade. Okay. So I know 63. The March on Washington was 1963 in that summer. Mm-hmm. So, okay. So 1963, this man saw something in you that says that the credit union makes life better for everybody, the member owners, and the values of co-ops are self-help, self-responsibility, democracy, equality, equity, and solidarity. And what I really like is this next sentence, that in the tradition of the founders, the cooperative members believe in the ethical values of honesty, openness, social responsibility, and caring for others. And that caring for others, it sounds like what he saw something in you where he thought you could care for other people and smart enough and work hard enough that he wanted to teach you this cooperative principles and values. That's neat.
Yeah, and interestingly enough, most of my time that summer, again, was on the front line with the members. They taught me the teller skills and gave me my drawer, and I was a teller. I guess because his office had a view of that front line, the teller line, he was able to just watch the employees, and I guess he saw that my interaction with people seemed to work. So I guess that's probably where he picked up this idea that it was easy for me, it was natural for me to really want to help that person that came in to do the financial transaction.
We're going to take our first break. Richard, thank you so very much. We'll be right back.
Washington, D.C.'s News Talk, 1450 AM WOL and 95.9 FM.
Information is power. That's why WOL is a great partner for this program. National Co-op Bank is sponsoring Everything Co-op. I'm Vernon Oakes. They are sponsoring it to give you information about co-ops so that you can either go join one, go join a credit union, get in somebody like Richard Ensweiler, who is looking for ways of making your life better through financial institutions, through financial transactions. Okay, so you've had, Richard, this wonderful, wonderful career. I spent a lot of time in the beginning because it's fascinating how you got into it, and I kind of wished in my career I did learn about co-ops earlier on. So after you've gotten there, you're at the Harley Davidson, and I'm looking at you at the Guard Shack. I know what the Guard Shack looks like. It's very small.
Yes.
You're at the end of where they are testing the Harleys, and one of Harley's main things that they're known for is the noise they make. I call it noise, okay?
Yes.
I ride a Gold Wing, and it does quiet. Okay, so you're in there making transactions with them, testing the Harleys with the room going on. I got a picture of this at 23 years old. Okay.
Let me just amplify that one just for a second. So a unique feature about any Harley Davidson you buy is that it has been run. So 1 out of 4 Harleys is taken out on the road, and there are guys that are nothing but professional test drivers. They take them for 10 or 20-mile rides just to make sure that they're running properly before they're ever shipped off to the person that bought it. The other 3 out of 4 are stand tested. So they have these 4 stands, and the mechanic down there will mount the engine, put the gas and oil in, and start it up on the stand. 4 of them together. And we were right under that stand testing. So that all day long, we're starting Harleys, and I'm trying to conduct business. So at the first board meeting, I said, I think I know how we can save some money. We might as well get rid of the telephone. I can't hear anybody. Okay. So it facilitated our need to move and get a good central location between the 2 plants. We kept open small offices in each of the 2 Harley-Davidson plants, but our main office was halfway between.
So when you first got started, how many members did you have, or you have a sense of that? And then when you moved, or how did you grow the membership?
Boy, that is a good question. I don't remember. I'm going to say we had 1,100 members, maybe.
Okay.
I'm guessing. But boy, that's a long time back, and I don't really recall.
The reason I'm asking, though, is that with 2 people, 1,100 seems like a lot of members to make sure that you're servicing them and their needs and their loans and collections and transactions.
Right, it really was. So part of the way that we were able to facilitate that many members is that most people were on payroll deduction at that time for their credit union. So every payday, and there was 4 a month, we get this long printout of everybody that was sending money to the credit union. And then we had a process of sifting it out and applying so much to the loan and adding so much to the savings depending on what they needed. So the fact that collections were pretty easy because Harley-Davidson was a stable employer, and so people worked there for a long, long time. So their loans were being paid back by payroll deduction. That helped significantly. And as they saved via payroll deduction. That helped significantly. The biggest issue we had was many of them would save $25 at payday, and the next day they'd be in to withdraw that $25. And so it didn't stay in there as long as we would like for many of them. But having that payroll deduction helped keep the staff small and facilitate what they needed.
Well, I guess they were like our family in growing up in the 60s, and there was more month than money. So
yes, indeed. Yes, sir.
Savings was not even I don't know. I didn't even hear that word that much. I don't know. No, I didn't hear that word in my family growing up. All right, so you in the Harley shop, listening to the noise, servicing 2 of you guys, servicing 1,100 people.
Yep.
Wow. So you really needed to know a lot about the co-op, how it all functions and how to make it work. And so then you moved it to a central place halfway between both plants. So what was that like?
It was a storefront location right on the main road between the 2 plants. So that was a lot better. So now we had the peace and quiet. We had a place that wasn't quite so easy to come and get your $25 the day after payday. So the traffic calmed down a lot. It was a much more professional environment. It was easier to make a good loan because there was more privacy. And it was a needed upgrade in quality of service for the employees. It might not have been as convenient for the people in the one plant where we were headquartered, but for the other plant, which was bigger and newer, we were now closer to them, so we were serving both in a more professional manner.
So how do you get to where this caring for others, both caring for all of those members, and that's what I get that's so different from a normal bank. and you've already mentioned this, your whole function and reason for being in existence is taking care of your members, not the whole reason for existence. And when I got my MBA, it was return on investment. Every decision was, what's the return on investment for the shareholder?
Sure.
The guy that may not live in that city, may not live in that state, may not live in this country. But how do you get the benefit for them where yours is, how do I benefit the member owner? And they're also your boss if they've got a board of directors. Yeah,
that's right. The members themselves select from amongst themselves the board of directors, and they are people that at that time they are people that worked in the plant, either factory workers or managers in the plant, and so they knew the people we were serving. They were very helpful, and back then, loans were based on character as much as collateral, and capacity. But character was one of the big 3 C's in making a loan. When you have a closed environment like the employees of a factory, the co-workers pretty much know the character of that person, and then if you make a loan and it becomes an issue, they kind of could help the other person that is struggling a little bit or is maybe not fulfilling their obligation to repay that loan, understand, hey, you're taking money from me and from the rest of us here by not repaying it. This is a cooperative, and we're all in it together. And I think, even though you can't be blatant about that, I think that atmosphere prevailed throughout Harley Davidson, and we didn't have much in the way of delinquency. People understood that this was a very unique service. The rates were very fair. It was a caring environment, and it demonstrated to me how cooperatives are so focused on the members and how everybody's in this pool together.
What are the 3 C's? I got characters, number 1.
Capacity to repay and collateral. You still have to have some kind of collateral. And today, much more so, it's so much more heavily regulated today that the character thing is, regulators don't even know how to look at that. All they care about is collateral and capacity. So, but back then, character was a significant determinant in making a loan.
Well, I kind of think it still has to be there for credit unions. I don't know. Because
so they look at that, and certainly it's important to the credit union. But what they're judged by, if you will, because today again the regulator plays such a big role. What they're judged by is, did you get enough collateral, and do they really have the capacity? Part of what we learned in the downturn in 07, 08, 09 is that they didn't have the capacity. People were fudging numbers so that they got beyond where they could repay a loan just to make the lenders were trying to make a loan beyond what was sensible. So even if you had good character in those times, if you didn't have the capacity to repay, the loans are going to go bad. So you had to do the rest too. But character was, I think, even more important back then. It was a simpler day.
Okay, so I'm in property management, and so I'm always renting. And looking at somebody's capacity, I normally look at their credit score or their income and try to get some sense of what's the rent compared to their income. And the federal government normally looks at 30%. You don't want their housing to be more than 33%, although in California it may be as high as 50%. But I still get to, will they be a good neighbor, getting to this character piece? That's one of my 3 things that I look at.
Okay, good. And that's important. And I don't know how heavily regulated your position is.
No, I'm not.
But if you can base it on character, I think you're going to win most of the time. Good people find a way, and they want to make sure that they can live there, that they keep their credit score well, that they have the ability to meet emergencies when they need to. So character should, and I don't mean to minimize. I'm just saying it's one that each institution and each lender has to judge for themselves. But what they're based on in the end is what the regulator comes in and looks at, and that is more numbers than it is character.
So we're going to take our second break, and then I want to come back and talk a little bit more. You mentioned the downturn of 07, 08, and 09, the Great Recession, as opposed to the Great Depression and how credit unions fared during that whole time. But we'll take our second break and we'll be right back. Please don't touch that dial. Welcome back, everybody. This is Vernon Oakes, and the program is Everything Cooperative. We have been sponsored for 5.5 years now from NCB. When we first got started, back then, we were only going to do it for 1 month. The October is co-op month, but it took off, and I enjoyed this so much. And NCB's mission is to support and be an advocate for America's cooperatives and their members, especially in low-income communities, by providing innovative financial and related services. And Richard Ensweiler, am I saying your last name right?
Yes, sir. Ensweiler. Yes, sir.
Okay, great. Have been in the credit union movement since 1963, 50-some years?
I retired 2 years ago. I put in 53 years. Yes, sir.
53 years. All right. Okay, retired. I don't know what that word means, but we won't spend much time on that. Okay. So what, being on this, like I said, program for 5.5 years, I had a number of people in here, and I hear things like the downturn of 07-08 hit financial institutions, but not credit unions the same way. It didn't hit the housing co-ops the same way it did single families and condos. So how did it affect the credit unions that you were involved in at that time?
So after, just a quick update, after Harley Davidson, I went to work for associations for credit unions, and I managed those for most of my life. And for the last 22 years before I retired here in Texas, and then also Oklahoma and Arkansas, so we had a regional association. So at that point in my life, so most of my life, I was in a position to assist credit unions do better for their members or help them in any way we could as their association. So in the downturn, what we saw in working with our member credit unions was that they didn't get caught up in trying to force loans in order to generate profits. They were still lending based on good lending principles, still based on our 3 C's for cooperative credit. And so they didn't put the member in a position that they couldn't afford to repay the home or the loan, and so they didn't suffer to the same extent that others did.
So when you look at capacity, and that's is why I think a lot of those mortgages fail, well, I know those mortgages fail, was people couldn't afford to pay them back when those interest rates hit.
And not only interest rates, but boy, they were getting in with nothing down. There was many instances where the lender was on commission, and they would falsify the documents to say that they were earning more than they were earning, and they just put them in a position where they couldn't succeed. But the lender made a profit. The member for the customer, those weren't members, those are customers, for a short time enjoyed a house they couldn't afford, but then it all collapsed.
So in this bank or mortgage industry, well, there's 3 reasons for a lot of these people, and their 3 are profit 1, profit 2, and profit 3. Okay.
That's right.
3 reasons. So they look at the short-term profit. So I could falsify, but even if I don't falsify and I got their amount of earnings down correctly, and then I say, okay, we're going to start this off with nothing down with 3%, and then after 2 years, it's going to go to 4%. After 5 years, 5, 6, 7, 8, 9, 10, whatever those points are, the interest rate goes up, and now even if they had the right amount of income, they can't afford it.
That's correct. That's correct. Because if they were put in way over their head, they don't have enough down, and the loan payments got to be too big.
So in a credit union where making sure that you are doing things that's right for the member, this is what co-ops do, how do you care for each other, you would never put anybody in that position.
You know, that, again, with your only motivation being to do what's right for your member owner, you're not going to try and put them in a position to fail. And I think there's no other motivation. There's no incentive to do the wrong thing. And so credit unions are just a different kind of institution in times like that.
Well, I would suggest in any time, but particularly in time, those short-term decisions is what caused the Great Recession. You got a number of these people doing it, a number of these loans, this bump was hitting at the same time. What was interesting to me is the domino effect. You got these dominoes set up, and you push one over, then all of these other things start tickling over, and then all of a sudden your cars, nobody's buying cars, and nobody's doing this, and all of this stuff starts happening.
Sure. Even in that instance where they're pushed, beyond what they can afford for a mortgage, now they got to make choices. Are you going to try and keep that house, or where's the money going to come from? I guess maybe you give up the car, or you find that you're giving up the car because you just don't have the income necessary to support where they've put you now.
Or you don't buy meds, or you don't buy food, or you don't do something.
And in the end, you probably lose it all, right?
Yep. But the dream is that house with the white picket fence or whatever it is.
Exactly.
And so you try to hold on to it longer than you probably should not have got in the first place.
Right.
Okay. But the focus I want to get is that the credit union, they did not have these same failures because they didn't make these bad short-term decisions. In the credit union, they're looking at the long-term decisions. This is what I find in the housing world. These everyday people are making decisions, and they're looking long-term, not short-term. The credit union is looking for what's best for that member.
That's it. That's the total focus. It's the only reason they exist. Yep.
Okay. So they don't have the same particular problems, and the world looks a lot better. So, okay, now I want to go back to you. 1963, you're a teller. Come back in at 23, you're the CEO of Harley Davidson, you and somebody else, or a couple employees. You moved the office. And how long did you stay at the Harley place before you moved on?
I was here a little over 3 years.
Okay. And then where did you go?
Then I went to the Michigan Credit Union League. That's the Association for Credit Unions. And back then, it was a real progressive association. It was probably the number one association in the country. They were doing such amazing things as introducing computers to credit unions. So I said,
oh my goodness,
that's amazing. I want to learn how to do that, and I want to learn some of the other things that I haven't seen yet in running this small credit union. So I applied for the position and got it, and I became a field representative. And what that meant was my role was to take a territory that they assigned to me and work with the credit unions in those areas to come up with better or best practices, or to listen to what issues they have and help them try and find solutions through the association or resources that we had. I found that to be more fun than anything I'd ever done. Now I wasn't only helping members, but I was helping institutions help their members, and lots of them. I had a territory of 100 credit unions. So every day I was out there making life better, I was hoping, for the credit union so they could continue to do the best job possible for their members. I found that to be the most fascinating job a person could have.
So you started off as a teller, and by now you're a field guy. So as a teller, you were talking to the members.
Right.
Now as a field guy, you're talking to the people that's talking to the members.
That's right. I'm working with management. I'm working, and if they assign it, maybe with Frontline, I'm working with the boards of directors to come up with the best possible practices and policies, helping them retain the best help. So now I'm, if you will, a management consultant on behalf of the association for them. So again, the association has no alternative except because they're a cooperative. They're a not-for-profit cooperative, so their only role is to make their members better, and their members happen to be the very credit unions that I love so much.
So I assume that's about 1971?
I went there in 68 and then left that position for the next one in 71.
Okay, so now where are you? So 71, I finished college in 69. I graduated and I walked in 1970. So I was in Cleveland 69, 70. Okay, so right. Where'd you go from there?
So the Minnesota League of Credit Unions, the Association for Credit Unions in Minnesota, had as their CEO a guy that had previously worked for the Michigan Credit Union League too. It was that league at that time was again quite progressive, and people that did well there, found it was pretty easy to find other employment because they wanted those people helping in their organization. So anyway, so this guy that ran the Minnesota League went back to the president of the Michigan League and said, I need somebody that can help me. I need somebody pretty good, yada, yada, yada. And so the president said, I know the guy. You need to get a hold of Richard Ensweiler. And so I went to the Minnesota League to be the number 2 guy. The number 1 guy was a Canadian who had left and gone back to Canada. And so now I'm number 2. At the end of the second week on the job, the CEO says to me, I just took a job working for the World Council of Credit Unions in Africa for 2 years. And so I'm gone. So good luck to you.
Somebody like to throw you to the wolves. Okay.
For the first time, I've got more than 2 employees. Now I've got about 16, and in all kinds of capacities. For-profit, we had a for-profit division, and not-for-profit. Maybe it's even closer to 20 employees. Anyway, so now I'm running that on a day-to-day basis until the board of directors decides what they are going to do to replace the CEO. And within a matter of about 5 months, they decided they didn't need to look any further. They were going to take this 30-year-old young whippersnapper and put him in charge. And so that became my first position as the CEO of an association for credit unions.
Now, is Minnesota where you started? Was that where you said you started? Was that home?
No, Milwaukee.
Milwaukee. Okay. Wisconsin. Okay. So you're still up in that cold area. Okay.
Yeah, still up in the upper Midwest, that's for sure.
All right. So 30-year-old. Now, have you found your wife yet? Have you started a family at this point?
Yes. I met a lady up there. She was everything I was looking for, and so we've been married now for 45 years.
Wow. How many children?
2, and 4 grandchildren.
Fantastic.
Life goes on.
Okay, 30 years old in Milwaukee, 2 weeks in the job. They move you from number 2 to number 1.
Now I'm in St. Paul.
St. Paul, Minnesota. Okay. I'm okay. I'm looking at Minnesota saying Milwaukee. Okay. Okay.
That's because you're not from there.
Okay. And this credit union league is a number of credit unions belong to it, and it's sort of the working group of credit unions. So they come together, and I assume that the 5th principle of credit unions is a lot of what you are about, is to make sure that the training happens, that you get programs together and you train folks.
That's absolutely correct. So associations for credit unions do a number of things, but one of which certainly is education. We train them on how to do the things that they're supposed to do and do it well. We help them with complying with the regulations and make sure that they're doing what they do the way it's supposed to be done as well. But we also then represent them in the legislature and in the Congress. We help them with public relations so that the image of credit unions remains strong. So you can do a lot more of that when everybody comes together as to everybody trying to position themselves in the marketplace. So, yeah, the association does all of those things.
Well, we're going to take our final break, sir. This is a great conversation. We'll be right back. Thank you.
Right.
Washington, D.C.'s News Talk, 1450 AM WOS and 95.9 FM.
Information is power. No, information isn't power. Information has energy. It's only when you use that information that you get the power. And so the National Co-op Bank is sponsoring this program to give you information about co-ops. So, Richard, May the 8th, which is coming up here really close, is when we are going to have, I guess that's early next week, we're going to end up with the dinner, and you get inducted into the Hall of Fame. At 1:30, there's a cooperative issues forum at the National Press Club, and then a reception at 6 o'clock, and at 7 to 9:30, there's a Cooperative Hall of Fame dinner and inductee. So I look forward to meeting you here next week, Richard.
Good. I'm glad you're going to be part of that. I'm very excited about this opportunity.
So I'll have a chance to bless the food.
Good.
Blessing the food.
Good.
Thanking God. So I'll be really doing what I like doing. He's blessed you and helped you to bless a lot of people, which is awesome.
Well, it certainly has blessed me and my family. We've just, again, as I mentioned earlier, I loved every day I put in this credit union movement, and I wouldn't get out until I put 53 years and then decided it was time for someone else to do what I was doing.
All right, and so I got you started as a teller in one credit union, went to the Harley, then you went to this league, and so it's 100 or so credit unions, and then you went from the Michigan one to I'm going to get this right here, to
That's
the
right.
Minnesota one, and then where did you go from there?
So I was there for almost 3 years when a much bigger organization approached me and said, we like your background, we like your training, we know you a little bit, so come work for us. And so I went to work for the Illinois Credit Union League, doing the same kind of things but with a much bigger organization. And I ran that association, that league, for 10 years.
Oh, I thought 3 was your max.
At that point, it was. My parents weren't sure I could hold a job any longer.
Okay. Loving what you're doing. So you're at Illinois for 10 years.
Yes, sir.
At these different state leagues. And so somewhere you got together with a bunch of these leagues coming together. What was that like? What was that?
Well, yeah, so the leagues have their own association. First of all, there's a Credit Union National Association, the association for all the credit unions in America. And that's a fabulous organization based right there in Washington, D.C. But these state associations, these state leagues also had their association where we could talk about issues that we have trying to make the world better for the credit unions we serve. So, yeah, so I was active with that and went through the chairs and became chairman of that organization during my career, yes.
Okay. So when you're trying to care for others, which is one of the values that I like about co-ops, and that's what you do in credit unions, I worked 1 year, 9 months at a Ford factory in Michigan in 66 or so. And I find that it was, all through my life, it was hard for minorities to get credit. So I see somewhere in here you started working with some minority groups or helping minorities to get credit. What was that about? What was that?
So after Illinois, I went to Wisconsin and worked for the CUNA Mutual Credit Union, Insurance Society, serving credit unions, and that's a whole different story. And I loved that for 10 years. Then I ended up in Texas, where they hired me to run the league here, another very, very large league, in fact, the largest league in the country. It was during my time here that a very interesting opportunity occurred. A credit union CEO, a lady that I respect dearly, runs a credit union down on the border in Del Rio, Texas. And she was having a problem serving many of the immigrants that had not received yet their documentation, trying to serve them with the services they needed so badly. That too often somebody came here, found a job, didn't have the paperwork they needed, but were employed, and so they were paid on a weekly basis. They would take that paycheck, they would go to a check cashing shop, they would purchase a wire transfer to send home, maybe a money order to pay the rent, and the rest was in their back pocket as they walked out of the check cashing shop. Well, that's pretty dangerous.
Yep.
And there's lots of stories about what happens on Friday afternoons if you've got dirt on your boots and you're walking out of a check cashing shop, and perhaps if you're brown skinned. So she said, we've got to do better for them. We've got to find a way that we can take them into membership of credit unions. But that requires either a Social Security card or an ITIN number. And we don't have those, so we've got to find some way to come up with identification that would satisfy the regulator.
Can I ask you what was her name?
Her name was Maria Martinez.
Okay.
And she'll be there, by the way, on the 8th. We're such good friends, and she's so happy with what we were able to accomplish in this story I'm telling you that she wants to be there. So you'll meet her and you'll love her. She's
fantastic.
A lady.
Okay.
So anyway, so I said, that's really good. There are millions of people in this country in that situation, and they're here now, and it's not us. It wasn't the job of a credit union to judge whether they should be here or not here. The fact is, they're here, they're working, they're God-fearing, they're family-oriented, they're hardworking, they're the kind of people that credit unions were set up to serve.
Wait, that's so different from what I hear comes across the border. Wait a minute, who you talking? You talking about different people? They're rapists and they steal and they murder. I mean, what are you talking about?
That's the image that some would portray in order to get the wall built, so that there's a controlled flow. I guess you're right, but no, not the ones that end up working that we see every day.
You just outlined the people I know. But keep going. I'm sorry.
Okay, no, that's what credit unions were created. And I can go to that whole history about how we started with that kind of people. But anyway, so I went to the federal regulator and I pled the case, and I said, look, they're here. We're not the judge, but we're here to provide financial services for these very kind of people that were important to credit unions. So they talked about it, the National Credit Union Administration. They went to Treasury. Treasury took it up, and they said, you know what, you guys are right. If you can get some kind of identification from, in this case, the Mexican government or a foreign government, Mexican was the main one, that would show that really is who they say they are. That is Jose Lopez, and that he really does live at that address. They verify that. They could then get what they call a matricula consular card, and that matricula card is the identification that would be needed so that a community-based credit union, for instance, could say, okay, that's a member of our community. We can serve them with financial services. And so they signed off on it. Now, the other issue became that any kind of savings interest would have to be reported to the IRS. And since they didn't have a Social Security number, it was important that they have an account available to them that didn't pay any interest.
Mm-hmm.
But that was, and that had to be available to all members. So credit unions could create that kind of account so that any savings they had would not generate interest, but it would be safe. It would be out of their back pocket. It would be in a place where they could issue transfers of money, whether it be checks or an ATM card. They could now send an ATM card to family to access it. But there was a way to send money, to utilize money without it having to come out of the back pocket. And then besides that, once they were a member, then they could serve them with loans. If they needed transportation to get to work every day, they could make a loan, and they would be served just like anybody else. And the respect that generated was immensely popular in the Hispanic community in Texas. It was immensely popular. So now they had a savings account, they had a checking account, they could make a loan, they could work every day. It improved their lives dramatically, and it's all because Maria Martinez called Richard Ensweiler, and we went and got it done.
You know, it's fascinating, Richard. I'm sitting here just bubbling over with, I don't know, pride, enthusiasm that you take a family that don't have this, what we almost think is just common, but they don't have an ability to do banking. And so they pay these high interest to cash their checks. They pay these higher fees to do anything. And if they do get a loan, if they're going to pay 400% interest or whatever. So you just helped the family really get grounded. And that's awesome. Thank you, sir.
Oh, I love that. And, if I can just take it one step further, the other thing that a lot of credit unions do, and what I would preach to them that they should do, is when somebody comes in and makes that first loan, they don't have established credit, but they can be verified that they've been working for this organization, whether it be a lawn care service or a construction company or anything, for the last 6 or 8 months. Now they're wanting a loan for transportation. They're going to have to make that loan at a fairly high rate of interest because it's a risk. So, but if they're buying it from the small used car dealership under the shade tree, they're probably paying between 35 and 45% interest. And we're saying, and the credit unions were picking up on this, that what you do is you make that loan at a rate of 18%, which is extremely high in the credit union land, but it's half of what they were paying before. But when you make that loan, you sit with the member and say, look, this is too high yet, but we're going to make this loan, and every year I want you to come back 1 year at a year anniversary, and we're going to review your payment history. And if you didn't skip a payment, if you weren't late on your payments, I'm going to show you how your credit score is improving, and we're going to lower your interest rate 2%. So the second year, your loan will be down to 16%. Third year, 14%, and on and on. By the time you need that truck again, you're going to be able to get a loan like everybody else at 6 or 8 or 10%. And
Richard,
their eyes just light up. And the pride that they get when they come in every year and say, look, I didn't miss a payment. And people are showing respect by lowering the interest payment. I mean, it's not only phenomenal for that member, but they spread that word to the family.
We got to go, Richard. I'm sorry. I love it. I look forward to seeing you here in a couple of days. Everybody out there, please live this week cooperatively.
Washington, D.C.'s News Talk, 1450 AM WOF and 95.9 FM.